Now, in company earnings news out of South Africa, prudence has proven to be a winner for Mpact. This strategy, along with expanding in sectors with market growth opportunities, has helped the packaging and recycling group realize record cash generation from operations of 2 billion rand, partially offsetting an increase in net debt. Headline earnings per share for total operations is up by 8%, and shareholders have been rewarded with a total dividend lift of 4%. Company CEO Bruce Strong joins us to unpack the year that was for Mpact in a greater detail. Thank you so much for your time, Bruce. Let's actually start off with that top line. I did see that your sales volumes declined while revenue grew. Does this point to the impact and maybe benefit of increased selling prices?
Yes, so what we saw in 2022 is a severe margin squeeze as costs went up, and we were only really able to recover those costs through higher prices at the end of 2022. And that really helped us in 2023. So despite the volume decline, we were able to grow profitability. But there's no doubt that the economy has been tough. The demand has been weak, and we've had to adjust accordingly. So we're most satisfied that we were able to generate cash that we did in that period, which was a record cash flow of 2 billion rand. And I think in these tough times, that's a key aspect. And that's especially important because we are investing, notwithstanding the many challenges in South Africa. We're still seeing many opportunities to invest, and we've got a capital investment pipeline of over 2 billion rand. And so notwithstanding the challenges in South Africa, there's still many opportunities that we are able to exploit.
And Bruce, I want to stay with that top line a little bit, maybe going in on demand, domestic demand versus international demand, the dynamics that we are seeing there. And if they are pointing to some sort of a global downturn, or if it's a little bit more nuanced than that.
I'm not sure if I heard the question correctly, but you're asking, is it a global downturn or not?
Yes, from a demand perspective, yes.
Yes, so from a demand point of view, we're seeing markets around the world are soft. We export a bit into the rest of Africa and also other countries. And there's no doubt that there's a lot of pressure on demand, or in fact, there's a lot of weakness in demand. And with that oversupply of product, which puts pressure on prices. Unfortunately, to make matters worse, costs are escalating. They're not going down for a number of reasons. The logistics challenges that were resolved last year have resurfaced now with the issues around the Red Sea and shipping routes and things like that. And so we're having to navigate a number of things. But having said that, I suppose we have spent a number of years building our resilience, and notwithstanding the challenges, we're confident that we can still do reasonably well in the future, although the first half of this year is going to be particularly challenging.
Yeah, and actually just on that, Bruce, it seems that the global supply chain constraints is something that you have not been able to get away from. I mean, in 2022, there was an improvement, but how big of a headwind is that still, especially considering the Red Sea challenges that we are seeing at the moment? Could things move to the downside rather than to the upside?
To be honest, the Red Sea issues are not a big factor in our business, either importing or exporting, because most of our stuff doesn't go through there. The big challenge there comes in the cost escalation, because shippers are escalating costs because of that. So it's not a direct challenge to us, and in many respects, it sort of insulates us in a way because it makes it harder to import here. But that's not a good thing overall in South Africa. A bigger challenge here is, of course, the port issues, which have affected some of our customers in the fruit sector. Having said that, they've been quite ingenious in resolving some of those and making other plans. And so we're confident that notwithstanding the challenges, there will still be opportunities for exports going forward.
Bruce, I see net asset values up just over 11%. Let's talk about that balance sheet, asset quality, as well as debt management over this period.
So we managed to really invest quite prudently, I think, over the last years, both in production capacity and capability, but also in resilience. So we've increased our solar capacity by a further 6.7 megawatts last year. So it's now 16 megawatts, which is quite substantial for a business our size. And that helps. And we've put in various water supply measures to account for municipalities that often have intermittent stoppages, and that's been helpful. And we focused on sectors which are really still able to grow. In terms of the debt, our debt did go up slightly, but that's notwithstanding the fact that it only went up a small fraction compared to the 1.5 billion we're currently investing in capital projects. So we've been fortunate to be able to generate cash through operations, and that's helped to keep the debt in check. And also our working capital improved last year, which is important.
I do understand that, as we're talking about the balance sheet and the investment that you're making into capital projects, of course, that is to beef up your strategy. But considering the macroeconomic environment and headwinds, have there been any significant shifts in terms of your capex priorities outside of the investment that you are making into beefing up your strategy?
Our strategy, which has been evolving over the last several years, has been quite consistent, and that is to focus on sectors that still do show growth opportunities in South Africa, such as the fruit export sector. We spent a lot in closing the loop in recycling and beneficiating recyclables, upgrading our paper machines to take in more recyclable product, upgrading our packaging production requirements and capabilities for the fruit sector and others. Export jumbo bins, returnable transit packaging, so speaking to further to closing the loop, reduce, reuse, recycle. And all of those trends are important for our business because they don't necessarily require consumer spending growth in South Africa. And so our capital projects have been aimed at that, and of course the operational resilience I spoke about earlier. And for the time being, we don't intend to change that dramatically.
Bruce, I'm also keen just to touch a little bit more on your plastics business here. That seems to be faring fine. And I'm wondering, as you continue to allocate capital, any more in this direction of plastics, just considering how plastic is perceived in terms of sustainability in the future?
Yeah, so we are still investing substantially in our plastic returnable crate business. So that's a returnable transit packaging, like you would know them as beverage crates, but also in retail, you'll see the crates that are used in the retailers. And that's a rapidly expanding business for us, and one which we are still very optimistic about. In our fast-moving consumer goods packaging, plastic packaging business, we are still doing reasonably well. And I must say, a lot of the media that goes out regarding the benefits of plastic is misplaced. The world won't exist without good plastic packaging. The food waste will increase dramatically, and there is some trade-off. And many of the plastics, in fact, most of the plastic products we make are fully recyclable and recycled. So I think the plastics often gets a bad rap, and not justified. Having said that, there are areas where it needs to be improved, and we are happy to be at the forefront of helping our customers to improve in those areas.
All right. Well, thank you so much for giving us more detail on those numbers that came out from Mpact. That was Bruce Strong, CEO of Mpact.